EPL Limited just released its earnings for quarter one fiscal year 2026, and these were some good earnings. So let's check them out. So first we have the highlights. The highlights for quarter one fiscal year 2026, all the important metrics we have. So first, revenue from operations grew from 10,074 million rupees. So all these numbers are in millions of rupees to 11,079 million rupees. I think that's around 1,107 crores, a 10% growth year on year. Then EBITDA grew by 18.1%. So this is the 18.1%, and this is the margin, the EBITDA margin. So EBITDA margin expanded from 19.1% to 20.5% in the latest quarter. Then we have EBIT, that is earnings before interest and taxes, that grew by 26.5%, a massive 26.5% jump. And the EBIT margin expanded from 10.8% to 12.4%. So EBIT, I believe that's around 137 crore rupees. Then and finally, profit after tax expanded a mighty 55.8% to around 100 crores from 64 crores in quarter one fiscal 2026. One thing to note, oh sorry. One thing to note, that profit after tax and revenue, especially revenue, does not include any foreign exchange loss. So if there was any loss due to foreign exchange, that is rise in dollar, fall in rupees, that may have impacted EPL, they do not include this in the revenue from operations section. So moving on, we have net debt and net debt to LTM, which is last 12 months EBITDA. So net debt declined from 5,039 million rupees to 3,898 million rupees. So net debt, which is total debt minus cash and cash equivalents, so it shows how much total debt exceeds a company's cash and cash equivalents. It decreased, so that's very good. So the gap between the cash and cash equivalents and net and total debt is decreasing, which is a very good thing. So 398 crores, and net debt as a ratio to, I compared to as a fraction of the last 12 months EBITDA, it has decreased to 0.45, which is very nice, which is also good. So lower these numbers, the better. Then we have the return on capital employed. It has increased to 18.9% this quarter when compared to 12 months back. 12 months back, 15.9%, but now 18.9%. So amazing profit growth, amazing revenue growth. Not the best revenue growth, but nice revenue growth and amazing profit growth. Moving on, we have personal care and beyond category. Now, EPL Limited divides its revenue into two segments. We have the personal care and beyond, which includes like beauty and cosmetics, pharma, and then we have the oral care, which is the second category or segment. So, personal care and beyond segment contributed to 54% of revenue in quarter one fiscal 2026. We can see in 2025 it was 48, and it has been steadily rising from like 46%, then 48%, and finally 54% of revenue. This is a faster growing segment, and the more this grows, it's better for EPL. I believe they say that. Moving on, we have oral care. Now, oral care is their older segment, you can say. And now, of course, it will contribute to a smaller percentage. Still 46% of revenue, but still a smaller percentage. So, revenue declined 2.7% year on year. This is oral care revenue. Here you can see 4,833 million rupees. That I believe is 483 crores, but I'm not even sure. But 4,833 million rupees, 2.7% decrease. Here it's written oral decline due to category softness in AMESA and few other markets. And this situation is likely to improve in coming quarters. So there was category softness. I have no idea what that means, but in AMESA, AMESA is the Africa, Middle East, and South Asia market. And a few other markets, there was category softness. So maybe there were less categories available in these markets from the oral section. And here we can see its clients, its customers basically, its customers, Unilever, Dabur, Colgate, the goat Patanjali, all of them are here. Moving on, we have few more data. Okay, so this is performance by region. How is each particular region performing? First, we see the AMESA, which was Africa, Middle East, and South Asia, and EAP, which I believe is the East Asian Pacific region. So AMESA revenue grew by 1.7% because I believe of category softness in oral care section. The EBITDA grew by 1.9% and EBIT declined by 2.3%. And here we can see 3,739 million rupees, which is 379 compared to total revenue of 11,000 something million INR. It's a substantial percentage. Then we have the EAP, which is the East Asian Pacific region. Revenue grew by 9.6%, solid growth. EBITDA grew by 8% and EBIT grew by 8.7%. Again, 2,682 million INR, so a bit less than AMESA. It seems that the AMESA region is the biggest region in terms of revenue. Then we have the Americas and Europe. Now, the Americas region grew by a spectacular 13.2% in revenue. EBITDA here grew by 35% and EBIT grew by 80.5%. Very nice. The Europe region, we had revenue growing by 15.5%, EBITDA growing by 52.2%, and EBIT, earnings before interest and taxes, growing by 105.2%. From here, we can also see that the revenue sources are pretty diversified when talking about geography. So here we can see the Europe and the American numbers are pretty close, not that big of a difference. Even the EAP, East Asian Pacific number is pretty close to like the Americas and what was it, Europe. And here we can see the AMESA is larger, substantially larger, not the smallest, not the largest. And okay, one last thing we can see, of course, is the looking ahead, the future outlooks. What are its future targets, future plans? So first, we have double-digit revenue growth. Now, aggressive BNC is beauty and cosmetics. So it seems that EPL's future, they are relying on beauty and cosmetics to grow substantially and the revenue in BNC to grow substantially. They're scaling up in Brazil and they're expanding in Thailand. And of course, they're looking at mergers and acquisitions. Here they're saying that Thailand plant commercialization in the second half of this year is on track. Very nice. Brazil is growing strong. W Brazil, BNC, beauty and cosmetics growth has accelerated to high double digit. And what else do we have here? Oh, sorry. Yes, and the next initiative they have is return on capital employed. They want to improve it to 25% in fiscal year 2029. So they're looking at consistent margin improvement. They're looking at robust capital deployment model and operational efficiencies in net working capital and increase in asset utilization. So all these very important, improving margins, better margins, more profitable, capital deployment. I guess capital allocation or capital deployment is one of the most important aspects in business. And net working capital, the more they improve net working capital, the more cash is freed up, which just improves their cash from operations, cash flow, pure cash flow is improved, very important. And of course, return on capital employed was 18.9%. We already saw that it expanded from like 15.1 So very nice improvement there. And they're confident of delivering the target through continued progress across initiatives. So I believe, yeah, that's it. Very, very good quarter, it seems, for EPL. The profitability growth was very nice, like 85%, sorry, 55% profit growth, net profit growth. Very nice. Um, okay, here is a note. EBITDA, we saw the EBITDA, right? EBITDA was, yeah, I believe that's 226 crores, expanded, 18.1% growth, very nice. So it's here written that EBITDA is excluding forex gain and loss. So the publication of forex gain is included in other income, and forex losses are part of other expenses. And forex loss was 63 million in quarter one fiscal 2025 versus a gain of 40 million in quarter one fiscal year 2026. So my earlier statement about forex gain and loss not being included in revenue from operations, I don't know, they may be right because it's written that it's included in other income. But of course, it operates in so many countries, so forex loss and forex gain is bound to happen. I think that's it. Have a good day.